Hello, traders. It's Sunday morning, September 10th. The NFL season is about to kick off, so I want to get a video out early today. We did a video on Friday morning, so our stocks really haven't had much of a chance to move, but let's take a look and see how they performed. I still like them on the long and the short side. Caterpillar was a stock that we featured on the long side, which incidentally, each one of my videos starts with a recap of the previous video's picks. I want to do that so that you get a feel for how successful this trading system is. So Caterpillar was our long. You can see how on Friday the stock did close a little bit higher than the previous day, but the market didn't really do anything. So it needed that market tailwind. Ultimately, what I'm looking for is for the stock to be able to get above the open from this long red candle. If it can close above that, it's got a good shot to make a new high and perhaps fuel even higher. What I like about it is the fact that we had this nice big bounce up on the earnings reaction. We tested that gap. It held successfully, and the stock has bounced off of it nicely. The reason that we like this is because it tells us that profit taking would normally be seen here after such a big move post earnings, and we got some of that, but they weren't able to crack it down below the pre-announcement level, and that tells us that buyers are lined up. We've also got a nice little bounce here with the market. We also had, which by the way, this is the SPY. We're going to do some market analysis in just a minute, but you can see how in the last week the market has been down. The stock has been able to hold these recent gains. This stock looks like it wants to go higher, and it's got good volume and it's got relative strength. So I still like Caterpillar. Mosaic was the short that I highlighted, and I like this upward sloping breakdown below this trend line. You can see on Friday the stock was relatively strong, so it is bouncing off of this low minus trend line right here. And this is almost a bullish engulfing candle, but it really is inside of this red candle. So poke down below, trying to find support, has rallied up a little bit. So we want to see continued weakness here. And we want to see that with the market also showing signs of weakness. If the market rolls over, and especially if it takes out this upward sloping trend line, you're going to see this stock really drift lower. And we're already seeing a lower high double top, and the stock is below all the major moving averages. And if we zoom out, we can see that the stock has been in a fairly substantial longer term downtrend. So this is just an oversold bounce. And now we're getting that bearish flag formation. So there's your flagpole, get your bounce, and now we should see continuation and test that low. So I still like Mosaic as a short as well. We're going to get into my pick for today. I'll give you another long and another short. But first, let's do some market analysis. I also want to get into a little bit of day trading because we've had some recent setups, and I want to talk about how previous price action tells us what the market is going to do right now and how that sets up our expectations for what the current day's price movement is really telling us. It's how we're able to devise our game plan for the day. So let's go in and take a look at a daily chart. This is the SPY, and you can see right out of the gate that we've got this long upward sloping trend line right here, and we have another one that's forming right in here. This is a major support level. This is a major support level. So how we get from point A to point B tells us what might possibly be happening. And on the way up, we had a nice market rally, but we didn't see a lot of consecutive stacked green candles, which tells us that yes, the market is floating higher. Volume was okay. We had little pockets of strength in there. So we had little surges where we had some decent volume, but overall, the candles are very tiny and they're mixed. And this tells us that there is constant selling pressure. So on every rally, there's a bid check. Every rally, there's a bid check. Every rally, there's a bid check. Well, because this price action was not really, really strong, we knew that we could expect some dips along the way. Well, here's one that started to form after we had a bearish engulfing candle off of the 52-week high. Okay, that was a pretty good smackdown. A couple days later, we get another long red candle and then another one. So this tells us that, this rally here was not all that strong. So now we're going to be testing some support levels. This is AVWAP-Q. I use it extensively, and you can see how the market tends to rest right at that point. So this is like a major moving average where institutions are aware of the number and it acts as a magnet. The 50-day moving average has also been a bit of a magnet recently. Many traders use these technical levels to game plan, and upward sloping trend lines, horizontal support and resistance lines, major moving averages, AVWAP-Q. It's important to know where all these levels come into play because when you're trying to day trade, you need to know where the market is going to be hitting the support and resistance levels. And if the market is able to get up to a resistance level but test it but not break out through it, well, that means that we're probably going to see a bit of a reversal because that is going to act as resistance. So I'm going to give you a couple examples of that, and we'll take a look at this longer term chart and do a little bit of day trading analysis. On a longer term basis, I'm not really sure what the market's going to do in here. We're at a critical juncture, so we've got so-so price action on the way up. We see some profit taking in here, and the market bounces before it tests the 100-day moving average. Okay, well, that was kind of nice. And then we get a higher low double bottom right in here with a bullish candle. Hey, now this is going to encourage buyers because they are going to nibble on the notion that this is a minor pullback in a longer term uptrend. So they come in and they start buying, and we get this long green candle through here. Now it looks like, hey, you know what? This could be a bullish flag formation. There's your downward sloping trend line. Really powerful move here. Yes, this looks like we could challenge the high, but there was no follow through. And when you want follow through, you want it to be immediate stack candle and another stack candle and another stack candle. That's how you know buyers are aggressive. They don't believe that they're going to have another opportunity to buy this cheaply, so they are aggressively bidding up the market. But that's not what happened. We didn't get that follow through instantly, so they were not that worried that they wouldn't have a second chance. And the longer that you have a breakout candle like that without any follow through, the greater the chance that you're going to start seeing some retracement and a pullback. And this pullback takes us right back below the AVWAP-Q, takes us below the 50-day moving average, takes us below this horizontal support, was resistance, breakout, now support, breakdown, now resistance, now support. You can see that horizontal line moving right through there, and it coincides with this 445 level. So that is a really important price level to watch, and you can see how it's been acting like a magnet. Next week we have CPI and PPI coming out. Those reactions haven't generated the type of response that we've seen last year because inflation is gradually starting to come in, but it's the core number that the Fed is really concerned about. They don't believe that we're going to see any great improvement in core inflation until we see an economic slowdown. The problem with that is that the Fed is comfortable raising rates until they see a fairly substantial economic slowdown. We could be seeing signs that the economy is starting to falter a little bit. Last month's jobs report was not all that great, but we did have a couple decent economic numbers this week. We had ISM services came out better than expected. ISM manufacturing was a little bit weak. Most of our economy is service related. We also had the beige book that came out last week, and that also showed some regional softness. So I believe that we are going to start seeing some softening economic numbers over the course of the next month or so. So this week we've got CPI and PPI coming out. They're probably going to have a reaction because the market's been waiting for any kind of news that it can latch itself onto. The back half of August, early part of September, that's a dead spot for the market. Lots of vacations being taken, so not a lot of active market participants. The kids are going back to school. I know that all sounds kind of hokey, but you've got the Fed in recess, you've got Congress in recess. It just year after year, that is just a dead spot in the market, and it's going to start improving probably this week. Then we also have the ECB rate decision on Thursday. Comments recently have been fairly hawkish, so we can look for a bump up there. Then we get the FOMC statement in 10 days here. Now, that's going to be a pretty big event. They're pricing in a pause for September, and the chance of an October 25 basis point rate hike, I think, has been hovering somewhere in the 75 percentile. So that's kind of what the market is looking for right now. Back and forth, very choppy price action. September's historically a weak month, so we have seasonality kind of working toward the bearish side. I'm neutral, maybe a little bit bearish in here, slant, because we have a double top lower high, and we pulled back off of that breakout pretty substantially. I'm looking for this test right here. This is kind of a critical level because if we can get through this convincingly, then the 100-day moving average is an easy shot, and it will be tested perhaps even a day or two after that breakdown. But we have to close below this upward sloping trend line right now, being above and below the 50-day moving average, and the AVWAP-Q hasn't really meant a lot from a swing trading basis, but it has actually provided us with some important information when we're day trading. So I'm going to focus on that right now. And you should know that on a swing trading basis, I don't know which way the market's going to go. So I have to keep my swing trades fairly minimal. If I've got a super, super good stock that I can really lean into with some heavy volume and really nice technical breakout, a stock that is on a mission, it's on its own path, okay, fine, then I can justify swing trading that stock because it's doing its own thing. We know the institutions are in there either buying it or selling it. Fine, we can swing those, but we need to be relatively passive in those plays because we don't have a market tailwind. Market first. So let's do some market analysis, and let's take the AVWAP-Q lines off of our studies here so we can clean up the chart a little bit, and then we'll take a look at what's happening. I'm going to take a look at a couple of days specifically because I want to show you what happens at these resistance levels and how they come into play when you're devising your game plan. So August 24th is a day that we want to take a look at because that 50-day moving average came into play. August 29th is a day that we want to take a look at because that 50-day moving average came into play. We're also going to take a look at the price action on Friday because the 50-day moving average came into play. So let's go into a 5-minute chart and let's start with August 24th, and we'll do some technical analysis, and you can see how this impacts our day trading. So we'll scroll back, August 24th, and we'll see that the market established a new, not a new relative high, but it was trying to get up and test that 50-day moving average. Okay, well, the early indication when you come into the trading day is, oh, the market's gapping up and it looks like it's going to take out the 50-day moving average. If I recall, I believe that there was a favorable number in here as well. It could have been a CPI number, for instance. Whatever the number was, it was pretty favorable. It was market friendly. And it looked like, hey, you know what? This could take off. This has a chance to gap and go. So the opening bell rings, and we know that opening gaps higher have recently been faded. So we're patient. We don't do any kind of trading. This first long red candle big tell right out of the gate. Sellers are seeing this as an opportunity to unload stocks at that favorable price. If buyers were super, super aggressive, you never would have seen this bar because they would have been trying to gobble up everything in sight. And at minimum, you would have had a doji, just a flat opening with a long green candle after that and a long green candle after that. But that's not what happened. So the market gets smacked down a little bit, don't quite fill the gap in here, and we find support at the prior day's high. Okay, not the end of the world. Couple of long green candles here stacked. Okay, this is what we want to see. Heavy volume, testing that 50-day moving average again. Bearish hammer off the high. Now we start retracing these two candles. This long red candle right here is a major rejection off of that 50-day moving average. It is confirmed resistance. Double top. Big bearish engulfing candle. Bearish 1OP cross. So when you see this, instantly you should be telling yourself, we're not getting through the 50-day moving average. Lots of sellers up there. I need to start shorting. I'm going to take some short positions here, going to take some starter positions, and I'm going to add on weakness. So I'll start here. If we can take out the close from yesterday, I'll add here, and I'll continue to add if I see stacked red candles, which you get right in here. So this is where you're progressively adding. When you don't have much to work with as far as the market, which I pointed out on a D1 chart, you really haven't had much. So when you get a decent day where you might be setting up for a gap reversal like this and a bearish trend day, you have to take action pretty early, and you want to add pretty early in the day because you're expecting to see some follow through. Once you have stacked red candles like this, then you can be fairly certain that, yeah, I want to short in here, find as many stocks as I can, and then try and hang on to them as long as possible through the course of the day because you've got this beautiful rejection off of that 50-day moving average and the AV WAPQ, and you're expecting follow through for most of the day. When you start shorting early in here, now you've got some decent profits in here. You're starting to see them rack up. So you know that you're going to have to weather a bounce somewhere along the way. So if you're a very passive day trader, meaning you like to take quick profits, these stack candles tell you that this is a day when you might want to act differently. You may want to hang on to those positions because there's more downside coming. So when you get into this level right in here, could you take profits on it? Well, how do you know that this is the bottom? How do you know that this wasn't the bottom? Look, you've got a long green candle in here. How did you know that that wasn't going to be the bounce? Well, you don't know. So how do you know that this is not going to fail right away and have another leg lower? You really don't. So what you really should practice is sticking with positions when you see this type of formation. Gap reversal, stacked candles in one direction, big item here on very heavy volume. So you got to have some confidence, even in here when you make this low. For many traders, myself included, when I see this type of price action, any bounce that I get, I wait for this bounce to stall out because I operate under the notion that this low is going to be tested. Will it fail? I don't know. But at very least, it is going to be tested. So I can short here with confidence. And when it's tested, I don't want to see this type of choppy price action. And quite honestly, when that started to unfold, yes, I would have taken profits here. So you got beautiful short up in here. Now you've got a decent position on. You know you're going to have to weather a little bounce. You get this little bounce that stalls out, I would add here. Now you get down here to the low of the day. That is probably not going to go much further because we've got mixed overlapping candles. So yeah, I would be taking profits there. Would I short this breakdown in here? I really wouldn't have, because you can see it's a marginal new low, and then boink, 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 we just bounce right back. So in my opinion, even though it didn't happen, yes, you got some additional selling into the close here, but we could have just as easily done this. So this is kind of a 50-50 proposition. That late in the day wouldn't have been day trading it. So that's how August 24th shaped up. My point is that that 50-day moving average came into play, just like the trend lines, the horizontal support and resistance lines, the AV WABQ. You need to know where these levels are on a D1 basis, because that's what's going to help us day trade. And in this particular instance, we get this gorgeous gap reversal, double top, rejection off of that 50-day moving average, long red candle, big volume, bearish 10P cross, checkbox, 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 checkbox. These are high probability opportunities. And right now, when the market's not giving you much, you got to step up to the plate pretty early on these. Now, this isn't trading the opening in here. We've had probably 45 minutes to assess the price action, but we can be very confident of what the market is going to be doing. And these are all outlined in my chat comments as well. So I'm not just going back and playing Monday morning quarterback. My commentary was consistent with everything that I'm showing you. So let's scroll ahead and let's take a look at that 50-day moving average again. So we come down, we have this, let's do it a little bit play by play. We have some selling pressure after that big bearish day right here. Market tests the low. So when you get these bounces, and in a bearish market, you're going to often see that the high of the day is established early in the day, and then the market continues to sell off during the course of the day, and it closes on its low. That's what creates a D1 red candle on the chart. So when you get a gap up like this, and you've seen heavy selling previously, you know that sellers are not just going to go away after they do that. And typically what we'll see after a huge day like this with a big gap reversal is you're going to see an inside day. You're going to see a very quiet day, because that is a massive move. So you get this little bounce in here. You don't really do anything much because you've got mixed overlapping candles. You got a long red followed by a long green. This is a good tell right here, though. This is a nice candle because you get this effort to rally the market up and to try and bounce after these heavy losses the previous day. And it gets just slapped down on really big volume. That is a bearish hammer. Now you've taken out this long green candle. There is a day trading opportunity to catch that. But you had to be pretty careful, because you can see this long green candle off the low. Would you have to close on this? No, but you want to see that given back very quickly with a new low of the day, or it legitimizes that there are buyers. So you get this attempt, and half of that long green candle is preserved with these bullish hammers right here. You have to respect that, because you did not want to see buyers coming in and supporting it here. So you would take gains on that move. Plus, you've also had a big sell off the previous day. Plus, you have the likelihood of drifting into the middle of this range and having a quiet day. So that's what happens. And buyers are going to be a little bit encouraged by seeing this type of bounce off of the low. So we're just going to keep going. Now you get a gap up. You know the sellers have not been far away. They come back and try and fill this gap, which they at least get through the prior day's high. Find support there. Didn't quite fill the gap in. And we never fill the gap in. Well, that's somewhat bullish, because the market was never able to get back and fill it all in. That tells us that buyers are not feeling as though they're going to have a chance to buy here. They're going to have to be more aggressive. So that's a pretty decent sign from a buying standpoint. We'll take a look at the D1 chart just to hash all of this out. I'm really focusing on the M5 chart though right now. So you've got buyers with some encouragement and they come in and you get this long green candle. Then you get a doji right in here. We don't mind a doji after a long green candle on the open. And then we had another long green candle. Well, this took us through the prior day's high. Pretty decent. Would this right in here get me very excited? Not in and of itself, because I'd like to see long green candle, long green candle, long green candle, long green candle, without any dojis in between, no pauses, no retracement. But I did notice this very heavy volume right in here. That tells me that these candles in here are legitimate. This candle in particular was very important. Why? Because this got us through the 50-day moving average. So this has me interested, and the volume's starting to pick up, and we're seeing these stack candles, and buyers have seen support over the last few days after a decent round of selling. So they're a little bit encouraged that this might be a good place to take some longs. Well, when we blow through the 50-day moving average with a candle like that on massive volume, that is legitimate. The chances of this retracing are very, very small. So if you waited a little bit to see these two candles, you would have been adding, adding, and adding. Here they try and retrace half of this long green candle. They don't even get to that point. Bye, 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 bye. So at this juncture right here, now you're having to be aggressive on the long side from a day trading standpoint. I want to be buying strong stocks that are also breaking out. And you come up in here and you get this bearish engulfing candle. And again, these comments were all in the chat room. You get this bearish engulfing candle, you get this 1OP bearish cross, and you're thinking, uh-oh, I've seen this before. We knew that there were heavy sellers recently. They're probably going to come back. This is going to be a meaningful bearish cycle. I need to get short in here. There's a bearish engulfing candle off of a relative high. No, it's not going to happen. Why? Why is this not going to happen? Why is the market not going to roll over this time? It's done it previously because we broke through the 50-day moving average on heavy volume, because we have seen super, super, super heavy volume on the buy side. So yes, are they going to try and shake these buyers out? Yeah, there's one long red candle in here. I was saying, when you get price action like this, you have to be willing to weather a little bit of a storm in here. And what we'd want to see is we want to see a benign bearish cycle, meaning that there's no progress to the downside, there's no stacked red candles, there's no heavy volume on the sell-off. We want to see nice tiny compression up here holding all of these gains, which it did. We get all the way here, and now you've got a breakout to a new high. And in here, I said, just stay the course. In fact, when we start to recover some of this long red candle in here, this is where you'd want to be adding, adding, adding right in here on that breakout. And you can expect a series of marginal new highs the rest of the day. This is a bullish trend day. This is one of those days that you get out of the month where you need to be more aggressive. And you've had to do that recently because there's been a lot of dull trading action. So we get this nice rally. Beautiful day. Excellent day for day traders. So we're going to fast forward, and we're going to do so first by going to the daily chart and taking a look at all of this information. So there was your low that we had. There's a nice big bearish engulfing candle. This is the first bearish trend day that I showed you. There's the rejection off the 50-day moving average. So here we get this bullish hammer in here, and this is what gets buyers excited. And then another bullish hammer in here. So they try and drive the market down, but buyers are able to rally it up. They try and drive the market down, but buyers bid it up and get it to close near the high. And that's why this day, when we started to see those early candles stacking, told us that we've seen a decent market bid in here. And now they start bidding up, and we blow through that 50-day moving average. So that is what tells us that this is going to be a bullish trend day. We also get follow through in a very, very big way and a little bit of follow through the next day. So let's take a look at what happened Friday. And again, how we get from point A to point B matters. So oftentimes, traders will look at one candle on a chart and go, oh, that's the candle, or oh, that's the candle that made everything else happen. That's not actually true. It's everything that's happened in here that sets up that candle and that tells us that we should be looking for that candle that matters. So on Friday, we had this long green candle closing on its high. Not really good volume. Okay volume. But then we get all this chop in here. You can see we've got lots of wicks and lots of tails. That tells us that it's random price movement. Buyers aren't going buy, 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 buy. Likewise, sellers aren't smacka, 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 knocking it down. This is buyers and sellers jousting. So you get a run up, you get a pullback, a run up, you get a pullback. It's just back and forth choppy price action, mixed overlapping candles, and then aha, there's a test of the 50-day moving average. Okay, already right here, I'm looking at this price action and I'm going, we're not going to get through. Ideally on Friday, we would have gotten through on the very first attempt, just like we did a couple of weeks ago. And ideally, we would have done so with those nice long green candles and big volume. But we didn't have that. So we shouldn't expect that breakout. In fact, what we should expect is resistance because this move is not that strong and it's not taking place on heavy volume. So we wait. We see this smack down here. Okay. Follow through. Is this a big, heavy round of selling? No. Lots of wicks, lots of tails, back and forth, same choppy price action that we saw here. The market tends to continue doing what it has been doing. So when I see this, I know that there's going to be another attempt at the high of the day. And what I want to see is now I want to see that double top lower high because that is going to tell me that there is not a lot of conviction at the high and that we can't get through that. Resistance is going to hold. Are we going to see a huge bearish engulfing candle, a gigantic rejection off of that 50-day moving average? The answer is also no. But why not? It happened before, Pete. Because we've seen that there are buyers and they have stayed persistent. We didn't see those long red candles and that big reversal. Look at that long green candle. Buyers. Look at that long green candle. Buyers. They're still there. So we get our double top lower high, and now we can expect to see some selling pressure. Heavy selling pressure? No. We're going to see a retracement that's very similar to what we saw on the way up. But it tells us here that we can favor the short side. We need to find the weakest of stocks that are breaking through technical support levels on heavy volume because they're going to be on their own mission and they're going to continue to sell off. And so we can expect drop, bounce, drop, bounce, drop, bounce, drop, bounce the whole way. When we start taking our short positions, do we get aggressive with them? Do we keep adding? Do we build large positions? No. the market's not going anywhere, and we don't have those stacked candles that tell us that there is strong directional movement one way or the other. So we take some nice little short positions. We try and stick with them as long as we can, and we take gains along the way when the market starts to compress. So in here, you get a nice little drift lower. You get this compression in here. Still nothing to really worry about. You can use the you can use the VWAP as a guide on when you believe the market could find support. We'll put up VWAP, and here you can see there's VWAP for the day. You can see how it finds resistance there. It breaks below it, it finds resistance. So I can still hang on to my short positions, knowing that we're just testing it and that ideally we back right off of it, and we do. And so in here, you're getting late in the day and you start seeing mixed overlapping candles. Okay, this is where you would want to start taking some profits on those short positions. I hope this helps you with your game planning because it's not just a key candle like this one, let's say off of the high. Oh, it's a long red candle off of a high of the day. This is the price action that told us that we should start seeing resistance at that 50-day moving average. This lower high double top is what told us that that 50-day moving average was going to hold. This long red candle here is a bearish engulfing candle. Okay, yeah, I would actually start shorting up in here. Would I get really aggressive with it? No, I'd want to start seeing some long red candles. Okay, now I've got another lower high. Yes, I would add to short positions in here, but then I'm pretty much going to be done. And whatever I've got on here, I'm just going to wait for it to leak lower, and then I'll take my gains later in the day. So let's take a look at a couple of stocks. Let's go back into that daily chart one more time because I want to reinforce this. If we're not above the 50-day moving average, and I would even argue that we need to get through this downward sloping trend line now, which takes us to probably 452 or so. If I don't get that type of breakout, I am not going to be aggressively bullish. I'm just going to be trying to day trade from the long side. If I see a breakout above that 50-day moving average, you know the pattern I'm looking for now. I'm looking for those early stacked green candles on heavy volume. Anything less, and that resistance is probably going to hold. Any mixed overlapping candles that happen to poke through tell me I can passively be long because we're above the 50-day moving average, but not aggressively. And now to get long on a swing basis, I would need to get through that 452 level. Well, what does it look like on the short side? What would I be looking for there? Well, here we've got a rejection off that 50-day moving average, so I would want to see a long red candle that takes out that open right there, which is about 443. If I get a long red candle through that opening here with heavy volume, then I'm going to be very confident that at minimum we're going to test this upward sloping trend line. If we happen to close below that, then yes, I start getting interested in taking some short bearish swing trades. Not a lot of them because we're going to have support here at the 100-day moving average. So need to see a breach of that and a quick breach of that. Then I know that sellers are finally in control. Right now, they're trying to figure out who's in control. We've got buyers and we've got sellers, and we got lots of mixed candles, lots of chop right around that critical 445 level. So hopefully the PPI, CPI, ECB, the FOMC, all that's coming up in the next 10 days. We need to have a convincing breakout one way or the other, and then that'll set us up for some decent swing trades. So let's go in. I'm going to really quickly show you a couple stocks that I like. I'm going to go into my bullish searches. I'm going to go into Green Royal Flush, and the column layouts that we have allow us to very quickly zero in on the best stocks. Yes, the fact that they are in these searches tell us that they're super strong stocks, but blue dots indicate heavy volume across multiple time frames. Green dots indicate that we have buy signals across multiple time frames, and the green dots also tell us that we have relative strength across multiple time frames as well. So the first stock on the list is Lilly. That is all systems go type of chart. This is a big rally and a big gap up. And most traders are going to shy away from this formation. I can tell you that Google and Netflix and Amazon and Apple have all had this type of chart pattern right in here. And people were not able to buy it because they just couldn't bring themselves to buying a stock that's making a new high. And what does the stock do? It goes higher, 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 higher. And then they look back a year later and go, oh, of course that was a great buying opportunity on that breakout. Well, the fact of the matter is they didn't have the guts to buy it because they kept thinking, oh, buy low, sell high. Stock is high, so I can't be a buyer here. Well, it's going to go much higher. This stock is on a mission. It's on a path of its own. What has the stock done when the market has pulled back, bounced a little, and pulled back? It's powered higher. Well, how can that be? 75% of all stocks follow the market. How can this happen? It happens because asset managers don't care what the damn market's doing in this particular instance. They want to own Lilly, not for the next day, not for the next month, but perhaps for 3 or 4 or 5 years. And that's why they're in there buying it right now. And that's why the stock is making a new high. They've got an incredible pipeline. Let's zoom in a little bit, see what's going on, and we'll take a look at the chart price action. So we've got a compression here, and then we have a breakout through a high plus trend line. Long key bar right in here. Do you have to rush in and buy this stock first thing Monday morning? No. Any dip, any retracement is going to be a nice opportunity to enter. So let's take a look at a 15-minute chart, and we'll take a look at OneOSI since I have it up. So when you see a really strong stock like that, your opportunities are going to be when you get these dips where the stock momentarily on a 5-minute or 15-minute basis is relatively weak. So right here it's weak. That's a beautiful entry point. Not quite down to the zero there, but here you get another little dip, and now the stock is back above, showing some relative strength. That's another beautiful entry point. So you wait for the next dip in here, and we're going to right click on Lilly. We're going to add an alert. We're going to use strong versus the S&P 500, and we're going to do so on a 15-minute basis. And the system, when I set this, is going to know that it has to go negative below zero, and then it has to go positive, and then I'll get my alert when it goes positive, and I'm able to evaluate the price action that's taken place from the time of weakness to the time of strength. And so I come in and I evaluate the stock, and that's the beauty of using these alerts is, gosh, buy, ooh, I want to buy it. It's so strong. It's so strong. It looks so good. I think I'll buy some right in here. Oh no, the stock's pulling back. Not again. I mean, this is the mentality that traders go through. I know I've been through it. So the alternative to buying here is wait for that dip. Wait for that opportunity to get in, but don't just think that, oh, the stock is now relatively strong. I need to buy it. No, you want to evaluate what the stock has done during this pullback. And in this particular case, you can see how it barely pulled back and it compressed, compressed, compressed. It started to find immediate support. So when I get this signal in here, I look at it and I go, yeah, it just barely even pulled back. Buyers are still in there bidding that thing up because they don't think they'll have a chance to buy it lower. So yes, this is a beautiful entry point on Lilly because of the nature of this move, super strong on massive, massive, massive volume, tiny little period of relative weakness when the stock compresses, telling us bye bye bye, bye bye bye, bye bye bye. So this is a good entry point for us right here. That's what you need to look for. When would you not want to buy Lilly? Well, when you get this period of relative weakness and it lasts for, let's say, half a day, and you see stacked long red candle, stacked long red candle, stacked long red candle, and it retraces all of these gains in here, well, that's not going to be a meaningful buy. That is not something that you want to be a part of when you get that final relative strength. So, how the stock gets to this point and what the stock does during the dip is important, because when you get that alert, that's the evaluation process you go through. Now you get this nice cross, and then the stock continues to move higher. So, Lily, I like it. That's going to be a long. Let's go into the short side and let's take a look at what we've got there. We can go into Royal Flush here and take a look at some of these stocks. I'm going to go into that daily chart and we'll see what we've got cooking there. Go right to the first one, SQ. This is a nice breakdown below horizontal support, but if I zoom out on the chart, I'm going to see that it is just as choppy as can be. When we looked at that Lilly chart, and I didn't mention this, but I should have, look at how nice and orderly the price action is. Once it sets a trend, it tends to continue. Minor compression, continue. See how nice this flow is? That's what you want to see. This is not what you want to see. All over the board. Choppy is all get out because it's all over the board. Oh my God, look at this big breakdown here. Oh, this is going to be a beauty. Doink. Oh, look, they're going to fill the gap. They're going to fill the gap. No, it goes where it wants to. So now I would pass on SQ. I'm looking for something more consistent. Etsy, not bad. Has been choppy in the past. This is a kind of a nice breakdown here. Mara is one that I've highlighted previously. It tends to have pretty decent stretches of price action. So we've got a breakdown right in here. And this looks pretty good. I've highlighted this before. I like Mara on the short side. Let's zoom way out and see what the stock's got going. And here you can see how we've had this big round of selling, a little bit of a rally. We're still above all the major moving averages. And I think I might have just shifted. There we go. And now we've got this trend line that we're testing. We would have to get through that 200-day moving average. And then I absolutely would like it. So market comes down, takes out this upward sloping trend line, easy path to the 100-day moving average. By the time all that happens, yes, Mara would be through that 200-day moving average. We had a long green bar in here, and Mara had been one that's been on my short list. And this long green bar right in here would normally be cautionary on the short side, but this was the announcement that it looks like the SEC is going to approve a cryptocurrency ETF. And that would mean that there would be some buyers of Mara because the stock would have to go into that type of an ETF. But here's the key. This is a short covering bounce. We refer to it as a solo because you've seen heavy selling pressure in here. We know on the longer term D1 chart, the stock has been weak. When these long green bars are easily given up, you can see how that 100-day moving average provided resistance, could get above it. And then Friday, we start to crack down below this upward sloping trend line. The fact that this long green candle was given back with ease tells us that it is not legitimate. It was a short covering bounce. So I believe the stock's going to have a pretty easy path to that 200-day moving average if we get that market crackdown. Yeah, I think Mara is a pretty good one. See if I can find anything else. The video is getting pretty long, so I think that might be where I end the video because it's a decent short. I've highlighted it before. I think that short is going to continue to work. I think that MOS is going to be another good short. We just need to see that 100-day moving average hold as resistance, and we want to take out that low that we had from last week. If we're able to do that, it's going to legitimize the breakdown below this upward sloping trend line. So I still like MOS. Like I said, market tests this upward sloping trend line. It's going to break down below this support level now, and it's going to continue to go down, probably challenge the low of the year. Thanks so much for watching, everyone. I know this is a long video. I know you got a lot of football to watch today, but I really wanted to get into some price action. And the key takeaway for all of you is how the stock or the S&P got from point A to point B matters. It tells us what to expect. It tells us how strong that move is. And if we should be looking for those key candles that tell us that a reversal is coming, make sure that you're aware on a daily basis of all of those various support and resistance levels, be they horizontal, be they major moving averages, trend lines, AV WAP Q. Those are all important price points to take a look at when you're day trading. Thanks so much again. Please leave your comments. We will see you Wednesday, and I'm going to try and get back on that schedule so that I'm doing videos on Wednesdays and then Sunday evenings. Good luck for your favorite team today.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.